The Radio New Zealand 13 to 1025 Bank Economic Report provides a clear foundation to argue that labor, employment, and immigration are not just supporting actors, but the essential protagonists in the story of New Zealand's economic recovery. Labor and immigration as the key to economic traction. Economic recovery stalled by labor market, weakness, and record immigration. The latest economic data presents a clear diagnosis. The New Zealand economy is stuck in first gear, and the primary causes are a weak labor market and a dramatic slowdown in population growth. For the economy to gain the traction it desperately needs, policies must directly address the interconnected crises in employment and immigration. The services sector, a story of subdued demand, driven by a shrinking workforce. The Performance of Services Index, PSI, which covers 2/3 of the economy, has been in contraction for 19 consecutive months. This is not just a cyclical dip, it is a direct reflection of weak consumer demand. The labor-immigration link, BNZ senior economist Doug Steele explicitly connects the dots. Slow population growth, linked to low net immigration, is one factor behind subdued demand. The soft labor market is weighing on consumer confidence. The vicious cycle. This creates a dangerous feedback loop. A soft labor market suppresses wages and confidence, leading to less spending. This subdued demand then forces businesses to freeze hiring or lay off staff, further softening the labor market. The exodus of a record 47,900 New Zealanders over the past year intensifies this cycle, draining the economy of both consumers and productive workers. The manufacturing services combo, an economy going nowhere, without labor force growth. The combined message from the manufacturing and services surveys is an economy struggling to gain traction. The critical missing ingredient for growth is a stable and growing base of consumers and workers. Without a reversal of net migration losses and an improvement in labor market conditions, this stagnation is likely to persist. A glimmer of hope underscores the need for a skilled workforce. The ANZ truckometer, showing a rise in light traffic, is a welcome sign of potential future consumer activity. However, for this hope to translate into sustained economic traction, businesses must be able to respond. The capacity challenge. If consumer demand picks up but businesses cannot find the labor to increase production, transport goods, and staff service counters, the recovery will hit a hard ceiling. The loss of momentum in heavy traffic could be a warning of this very capacity constraint. An economic recovery without a parallel strategy to bolster the workforce is a recovery that will quickly run out of road. The core problem. Immigration has slowed to a trickle. The statistics are stark. Annual net migration has collapsed by 80% to just 10,600. More alarmingly, the record outflow of New Zealanders, half to Australia, points to a labor market and economic opportunities that are more attractive offshore. ASB senior economist Jane Turner confirms this core argument. The subdued pace of net immigration reflects the weak state of the New Zealand labor market and is likely to be slow to improve over the coming year. Conclusion. The path to traction. The evidence is overwhelming. To get the economy out of first gear, we must make it a national priority to boost labor market confidence, create conditions where workers feel secure and see opportunities for advancement, stemming the tide of skilled workers leaving. Revitalize immigration settings. Develop a targeted immigration policy to fill critical skill shortages and add to the consumer base, reversing the population slump that is suppressing demand. Align employment and economic policy. Ensure that every economic stimulus measure is evaluated through the lens of its impact on job creation, wage growth, and the retention of New Zealand's human capital. In short, labor, employment, and immigration are not side issues. They are the necessary elements for economic traction. Until these fundamentals are addressed, the economy will continue to struggle to find its footing.